Okay, this is timing strategies for July the 16th, Tuesday. Client blog update. This is not for public recommendations whatsoever. It's just designed to communicate with the public to our clients as best effectively we can. If you're a member of the public and you happen to come upon this, if you have any questions, please give us a call or an email. You can go through our blog site. Either way. And again, it's not a buy or sell recommendation or take any action. It's just designed to update our clients as frequently as possible on our strategies and what we're doing. Well, wouldn't you know it, yesterday, when I didn't get a chance to post a blog because I got a 1-year-old and a 3-year-old, and they take more of my time than I sometimes have, I didn't get a chance to upload yesterday's market adjustments, account adjustment, but we actually went long a little further. We were long 45% back here. Well, actually, we were long 60% on the 27th. We reduced it. We went long again on the 3rd, 60%. Then on the 8th of July, we reduced that 60% to 45%. And then today, we actually went long again, or not yesterday, not today. Yesterday, we went long actually 65%, which was Tuesday, with the indices on the S&P and the basket, and also with the financials. What I want to show here, which I'm sure everybody's going to be chattering about for another day or two, vibrating, is how that XLF looks today. Yeah, that's great. If I knew that was going to happen, like if I had a crystal ball, I would have loaded the whole boat up. I did not have a crystal ball. I still don't. And so we manage risk. But we take the odds when they're in our favor, and we try to manage the risk and the amount that we're going to put on based on what our systems tell us. Long story short, let's go back to the S&P. SPY, what am I looking for now that we're long? Okay, worst case scenario, we could still see down here price that takes us down to about the 1170 level. I mean, we could get a whipsaw where it has one day up today and then another washout tomorrow, Monday or Friday, by today, tomorrow, I mean Thursday, Friday, or Monday. We're still looking for that 1170 level. If that happens here soon, when we'll go from 65% long to maybe about 120, which we were looking at doing back here at B2. B2 seems to have gotten moved a little bit. If we don't get that trade back down in that washout where we can add to our long position, what am I looking for now? All right, well, this is pretty easy. What I'm looking for is a retest of that level of the breakdown of the March lows. So that comes in at about 126 on the spiders, or 1260 on the S&P cash, depending upon how price negotiates that level right there at 126 quarter, 126 half. Will determine whether we're going to go flat, whether we're going to go short, and I expect there to be a lot of noise at that level because there was a lot of noise basically around that level for many days, so we might get a little noise on the other side back up if we test it and close above there. But longer term, I don't know where this market's going. So we just got to manage risk. Where would I look to get short or to start taking some of that risk off? Like we said, right up here, potentially as high as, if we were lucky enough to get that, about 1320, 1330, 1340. So 1320, 1340 in this level. And that's where we'll start taking some of that long position off and start looking to maybe go short. And again, maybe not. But that's giving you kind of a estimation roadmap looking forward. Real quick, let's take a look at the GDX. We were long we are long 20% of the GDX from right here. 15% we actually added a little more right here, so 20%. Markets up, financials up, gold down. Look at the GLD. Much stronger than the actual, well, not much stronger, but noticeably on a swing trend basis, stronger than the actual paper mining stocks, the precious metal stocks. If we can come back down to this level on the gold and hold it about the 93.5, 94 level and not get a big heavy close below there, and I expect there to be some noise around this level here, so we'll hold it if there's a close or not. As long as we don't close below this level, like I've said earlier, as long as we can hold that $90 price tag on the GLD or the gold, we should be okay. And that, if you'll notice, is basically playing with the financials, and everybody's flapping about it. Long metals, commodities, short papers, banks, things like that. That's going to be basically the trade and how it's going to work for the rest of the year, in my opinion. So, you want to kind of get long, short, spread one against the other. Let me give you a quick look at the XLE. Now this is something we have the DUG short from believably, hard to believe, up in this level. We added to that yesterday on a break below that, so we have a pretty sizable position in the DUG in our Schwab managed accounts. First place I'm looking to maybe start covering some of that Doug or taking some size off, I don't know, is that 73, 75, 74 price tag level that we got marked out there. It says 73.86. Depending on how it negotiates that level and then what we're going to get at 69, if we get that far, we'll determine that. Because if you look back all the way, this channel has done really well. We broke that median trend line. We held it, we bounced, and now we're through it. So, it's possibly as deep as 69 or 70 down to that regression line that we see down there. Here's something else I want to point out to you. We also just bought a little bit of, not much, is TBT. It's an inverse of the TLT. We bought it today. Worked out really good, hopefully for one day. And again, let's look at the TLT, which is the long 30-year bond. We got this breakdown. So this is the inverse of the TLT or the 30-year bond on a 2-beta scale. So it's working out pretty good. Bonds are kind of slow-moving creatures. This might be a top for quite a while. This might just be, well, who knows. But we got the TBT on right now. Not as much as I'd probably like, depending on what it does tomorrow. If it takes off like a monkey or a frog, then obviously we won't have enough. We may add to that, but I think that the lows for the TLT are in, or the lows for this TBT are in, for at least another month or so. And then let's take one last look at the XLE. We went to that one. XLF, we did that one. Let's look at the IWM, and then I can get out of here. IWM, extremely strong. That's why we put the basket on. We don't just trade the S&P or the NASDAQ, one indice. We got to put a basket on because you never know which one is going to do the best. So that IWM has done real well. We're back above that level. We've closed above, a lot of the levels, but we're going to run into some resistance right now where we're at on that IWM at that 68 price tag. We didn't take any of that off. We'll see what happens tomorrow. And again, that looks much stronger than the overall market, however temporary it may be. Let's look at the Qs for the NASDAQ 100. Same thing there, not as strong as the small caps, but we're back above that threshold that we put in, that we said we wanted to see. And how it negotiates things and manages things from here is going to be the determinant. Basically, we're at right now is a range between here, and if we can get back up to this level and test that level of that breakdown point, based on what it does on a closing basis, we'll determine what we're going to do with the overall position as far as how long we want to hold it, where we're going to get it short. So every market is basically relating to another right now. And then, again, back to the spiders, and then we'll shut this off. Looking for a test of that 126. If we get it, we'll see. But it's a day-to-day process in this type of environment. So feel free to give us a call or an email. Until our next update, I wish you all the best.